All right, let's talk about the Pi network. It's a project that's sending out some seriously confusing signals right now. On one hand, its price has taken a nosedive, but, and this is the interesting part, there's a growing whisper that a big comeback could be just around the corner. So what's the real story? Let's dive in.
So that really is the million-dollar question, isn't it? After a pretty rough drop, is Pi Network actually about to bounce back? Or is this just a pause before another leg down? You know, when you look at the data, it's like it's telling two completely different stories at the same time.
Okay, so let's break this down. Think of it like a tug of war. In one corner, you've got the price chart. And let's be honest, it's been looking pretty grim, just a steady slide downwards. But in the other corner, you have these classic bullish signals starting to flash, plus some really solid real-world growth happening behind the scenes. And these two forces are pulling in opposite directions. That's what we're going to unpack.
All right, first things first, let's start with the charts. We're going to put on our technical analyst hats here and look for clues, because in the world of crypto, these patterns can sometimes give you a sneak peek at what might be coming next. So check this out. One of the most interesting things happening right now is this pattern called a falling wedge. It sounds complicated, but the analogy is perfect. It's like a coiled spring. You see the price getting squeezed tighter and tighter. The downward pushes are getting weaker and weaker. For traders, this is a huge signal. It suggests that the sellers are getting tired, they're running out of steam, and when that happens, well, that spring could be ready to uncoil in a big upward move.
And it doesn't stop there. We've got another clue called bullish divergence. Again, sounds super technical, but the concept is actually pretty straightforward. Imagine this. The price itself keeps hitting new lows, right? But the engine driving that price, the momentum, is actually getting stronger. It's starting to make higher lows. That mismatch, that disagreement between price and momentum, it's often one of the biggest flashing signs you can get that a trend is getting ready to flip. And we can actually see this in the numbers. The RSI, or Relative Strength Index, is currently sitting around 29. Now, for those who follow this stuff, you know that anything under 30 is basically the market screaming oversold. It's a sign that the selling might have just gone too far, and bargain hunters might start to see an opportunity to jump in. Okay, so we have all these patterns and indicators. What does it actually mean for the price? Well, right now, we're floating around that 20-cent mark. There's a really important floor, a support level, down at 18 cents. But if these bullish signals are right, the next major target to the upside, the ceiling they're aiming for, is 50 cents.
Let's just pause on that for a second. A jump from 20 cents to 50 cents, we're talking about a potential 150% gain. Now you can see why this has so many people watching so closely. That's a massive move. But look, charts and patterns are only one thing. They're just part of the puzzle. For any project to have real staying power, it needs more than just a good-looking chart. It needs real-world utility. So for our second major clue, we need to get away from the charts and look at what's actually being built inside the Pi ecosystem. And it seems like the team is pushing on three main fronts here. 1, make it super easy for developers to create new apps. 2, get more and more businesses to actually accept Pi as payment. And 3, put their money where their mouth is by investing in new companies building on their platform. Take the Pi App Studio, for instance. They just rolled out some cool updates. We're talking about AI tools that can help you generate a logo for your app or even write welcome messages for a chatbot. It might sound small, but what it really does is lower the bar. It makes it way easier for anyone with an idea to start building. And of course, more apps means more reasons for people to use the network. And is it working? Well, the numbers from PiFest 2024 are pretty telling. Get this, over 27,000 active merchants in 160 different countries. That's not just theory, that's actual real-world commerce happening, with people using Pi to buy and sell things. That's a huge proof point. And if that wasn't enough, they're basically throwing gasoline on the fire with Pi Network Ventures. We're talking about a $100 million fund, $100 million, all dedicated to helping startups build on the Pi blockchain. When you commit that kind of cash, you're sending a pretty loud message that you're serious about building a real ecosystem. Okay, so let's bring this all together. We've got our two big clues. The charts are hinting at a potential reversal, and the fundamentals, the actual business development, are looking pretty strong. So, how do these two worlds collide? How does this all shape what the market thinks is going to happen next? Well, the honest truth is that right now, the market is still skeptical. Despite all these positive signals we've talked about, the overall feeling is mixed. A lot of people are still bearish, especially in the short term. I mean, the price is still way down. And it just takes a while for good news to sink in and actually change people's minds.
But that skepticism is exactly what could make things get, well, explosive. This kind of setup, where sentiment is low but the underlying signals are strong, is the classic recipe for something called a short squeeze. All it takes is one piece of good news, a big partnership, a killer app launch, something that makes the price pop. All those people betting against Pi would suddenly be forced to buy back in to cut their losses. And that buying frenzy? It just adds more fuel to the rocket, pushing the price up even higher, even faster.
Okay, but let's pump the brakes for a second. It's really, really important to balance all this optimistic talk with a heavy dose of realism, because for all the potential upside, there are some very real risks we have to talk about.
First off, let's not forget, this is crypto. It's going to be volatile. That's just the name of the game. Second, that bearish mood we talked about, that's a serious headwind to fight against. And finally, there are some technical things to be aware of, like potential liquidity problems, and the fact that a whole bunch of tokens are still locked up. That means they can't be sold right now, and when they eventually can be, well, that could definitely affect the price. These are not small things, they're serious risks.
And really, this all boils down to one critical point, which is stated very clearly in the source material we're looking at. An analysis like this is just a snapshot, it's not a crystal ball. The crypto market can and will do the unexpected. So that old saying, do your own research, isn't just a catchphrase. It is absolutely essential.
And that leaves us with a much bigger question, one that goes way beyond just the Pi network. It's a question for the entire crypto space, really. When does it happen? When does the real-world utility of a project, the stuff it's actually doing, finally become more important than all the market hype and speculation? What's that magic tipping point where value is based on substance, not just sentiment? Honestly, that's the billion-dollar question that everyone in this industry is trying to answer.